Hello and welcome to a fresh new edition of Bazaar Morning Call. I'm Prashant. With me, my colleagues Sonia and Nigel. Guys, hi.
Hi, morning.
All of us back from a one-day break, and I think we will usher in perhaps a new high, at least on one of the indices. That's essentially the sense that the SGX is also indicative of. Perhaps it's going to be the Bank Nifty. I mean, and I think that is basically going to be the big headline when that happens. You've got the Nifty, which is about 2% away from its all-time high, which was in October of 2021. That was 18,604. The Bank Nifty, of course, we made a new high just earlier in September before, we saw a sharp correction in October. And that's just about 1/3% away on the Nifty Bank. So almost back at all-time highs. It's, of course, going to be a much bigger deal for the Nifty when we finally get there. Perhaps not today, but, I think equally momentous for the Nifty Bank as well. What happens from here, of course, is the big question. Will it be a crawl or will it be a run-up? Sentiment, momentum, etc. Very, very positive. SGX indicating about a 50-point higher start this morning. Good morning, guys.
Hi, morning, Prashant. Morning, Nigel. Absolutely. And, the going has been good, right? I mean, even this morning, the SGX Nifty is indicating a big gap-up opening. There's so much momentum in this market. Anyone you speak to on the, on the street will tell you that perhaps FII flows are also coming back in a big way. The only worry is that the commodity complex has been rising for the last one to 2 weeks. So on the horizon, that's the only, niggling worry for the market. But rest, all the pieces are coming together. So as we've been telling you, a 10-month high for the index, virtual all-time highs for the Bank Nifty as well. And there was large buying in the cash markets once again, about almost 2,000 crores of buying from FIIs. And put together in the last 5 trading sessions of November, FIIs have put in over 8,100 crores. So it's looking pretty good. On Wall Street, it was a pretty strong session there as well. So the Dow was up in excess of 300 points. And now, the results of the midterm elections will be keenly watched. But I reckon that for our own markets, we've moved beyond a lot of these global cues. And, our own markets have it good in terms of FI flows. Earnings have improved, especially, pockets like banks. So it's an uptrending market. Just that the new highs, I mean, we're barely, about 300 points, less than 300 points away from that. Whether it comes today, through the course of the week, time will tell.
Time will tell, but I can tell you this, Sonia, that, I met a bunch of people yesterday. The amount of, and this is, a mix of long-only hedge funds, etc., extremely positive about India and prospects from here. The only question is, as someone who's seen this play out, 10, 15 years ago, I hesitate a little bit. What from here? We're already at new highs. How much higher in this leg can we go? But I think, we'll take it as it comes. I think that's basically what we need to sort of deal with. But I have to tell you, extremely bullish, not just about India, actually, but about global equities. That's the view which is developing, that bulk of the rate hikes, etc., are behind us, and you got to look forward. So let me just quickly outline how things are. So new highs on the Bank Nifty within touching distance. So that's not very far away. It's 41,840, perhaps should come today. Most likely. The Nifty is 2% away from its October 2021 highs, which was 18,604. As I said, overall sentiment remains very, very positive. And this is true for India. It's true for global markets as well. If you just rank returns amongst emerging markets year to date, I mean, actually amongst all large markets, US included, India ranks at the #1 pole position. Steady stream of FI money coming in, right? I mean, every day now we are starting to notice 1,000, 2,000 crores of money which is trickling in. And in November so far, that adds up to about a little over 8,000 odd crores. Globally, the dollar is weak, and this is pretty interesting. Last Friday, the DXY index fell 2%. It was down on Monday. It was down last night as well. So 3 days, the dollar index has lost about 3% or so. The 20-week moving average for the DXY index is about 108.9 something. And that's a long-term support off of which the dollar index has bounced. If that were to go, I think that is unambiguously positive for emerging market flows. It's the primary channel through which pressure or pleasure sort of comes through for emerging markets. The dollar index, the dollar that is, against most currencies. We get the US CPI numbers tomorrow, and I think an undershoot or an overshoot always matters. It's an important data point. I would say it's much more important than the midterm election results, which we'll start to hear about later, starting a little later. So the inflation number is what you want to watch. China pessimism is receding. I mean, despite the fact that over the weekend gone by, we heard officially Chinese politicians saying that zero COVID is here to stay, etc., stocks reacted positively. So I think this is another reason why that the dollar is under pressure, that China is coming back up. So you don't need, not everyone needs to pile in completely into the dollar and remain there. It's not risk off. Maybe there is optimism building in China as well. And the point is, given the way Chinese markets have suffered, it's possible you get an easy 10-15% bounce in China as well. Brent oil prices, they are back, and I think that's another good thing this morning. They're back at about $95 a barrel. We've got the Energy sort of Association in America, the government agency, which has cut its demand estimate by about 100,000 barrels per day. So oil prices coming under pressure, which is positive for a large importer like India. What are you watching?
Well, the nation's going to be gripped because India is going to be participating in the T20 semi-final and final, right? So the stage is set. The Nifty is on its way to that trophy. The pitch is looking pretty good. And in fact, in terms of a batting lineup, the openers are doing a good job. And then you have Surya Kumar Yadav, who comes and hits it out of the park. That's Reliance Industries. Last two sessions, the end of the day has belonged to Reliance Industries.
Completely deja vu, Nigel, right? Yeah. I mean, Friday's session repeated
on Monday.
On Monday, absolutely.
So let's begin.
And if it's an India-Pakistan final, then that will be the cherry on the cake, right?
That's going to be a thriller. But let's, get to the stage set for the Nifty to have a trend day. The Indian markets, well, we need to catch up with positive global cues for the last two trading sessions. So that's pretty good news. The dollar index, well, in the near term, it seems to have made a peak around that 114.5 to around 115. At least that's the sense you're getting, because the kind of downtick that you've seen, it's below that 110, which is good news for India. The Nifty Bank, that bounced up in trade. There was fresh long addition even in Monday's trading session. And that said, for fresh all-time highs in the first tick itself. And Reliance Industries, well, that's been showing some good traction. If you pull up the intraday chart as well on Monday, you'll see that one ended at the high point of the day. And that's what's giving the final, knockout punch to the bears. Now, the FI positioning, that's interesting. In the cash market, they bought close to $2 billion odd. All of that in just 8 trading sessions. On the index futures, they continue to remain net longs, but we were asking for some shorts. So they've added some shorts, in this series so far. The long positioning has come down. When you have shorts in the system, at some point of time, it's going to give us that additional fillip that you're looking forward to. What are the levels you're looking at? Well, the resistance level, we're going to be starting around there, 18,350 to around 18,400. And I say this is a crucial resistance because even in Monday's trading session, there was writing seen at around that 18,300 call. Premium was around 50 rupees. So that plugs in perfectly with that 18,350 odd level. On the downside, though, support seems to have moved up a little bit. Aggressive writing was seen at around that 18,100 put, and the premium out there was around 75 rupees. 18,100, 18,200 put as well was fairly active. So that's giving you a sense that the 18,100 level could be a bit of a support. SGX Nifty suggesting a gap up. Today, the shallower dips could be bought into. On Monday, I made this point that we're likely to see a gap up and then that gets sold into and you buy the dips. Today, a shallower dip could get bought into. That's because we're bracing ourselves for a bit of a trend day. So let's see how this plays out. Sonia.
Absolutely. And the Dow ended in the green for the third straight day as well, right? So over there too, the cues have been very supportive from the global arena. A couple of things to watch out for. The PSU banks definitely was the star piece all of last week. And through the course of the earnings season, right, our colleague Abhishek put out a note about the PSU banks and how they've done this earnings season. Very strong loan growth and more importantly, asset quality across the board has improved dramatically for PSU banks. So that continues to be in focus. There's lots happening on the results front. There's Tata Motors, Pidilite, Lupin, Godrej Properties that come out with the results today. Tomorrow you have Ashok Leyland and we'll top it off with M&M on Friday. So lots to talk about. And then there are 2 IPOs that open today as well. We'll keep an eye out on that. 5-Star Business Finance and Archean Chemical Industries are the 2 IPOs that open up. By the way, we don't talk much about the Bitcoin anymore, but there's been a massive collapse there in the crypto universe with the Bitcoin hitting the lowest level since November 2020 and briefly slipping below that 18,000 mark as well. So lots happening in the crypto universe and that rapid slide, the sell-off over there continues.
And by the way, gold is up 2%, 2.5%, which has been kind of languishing. So it's kind of ironic that gold is up. Old gold is up 2% and the new digital gold, right? I mean, Bitcoin was often described as the new gold. that is off to where it is. I mean, down 12% or so overnight. So that's pretty interesting. Well, let's get you some calls that we have lined up for you across. So this is on equities. Gautam Duggar of Motilal Oswal Financial Services says some risks have emerged with the commodity complex rising last week, which is the only worry. He says other than stable earnings, positive management commentary and no major earnings cut is a big positive. Adds near-term upside is limited as the Nifty is trading at 20 times one-year forward earnings. He says PSU banks are still under-owned and continue to do well.
Okay, let's talk a little bit about the rupee as well. The rupee actually gained, I think it's now below the 82 mark. 81.90 was the last tick on the money markets. Kunal Sadhani of Shinhan Bank says a huge move in the 2-year German bonds, highlighting more aggressiveness from the ECB, pushed the euro higher. He says investors are hoping for a political gridlock that could prevent radical policy changes and for a slowdown in the pace of rate hikes from the Fed. He says this in turn is weighing on the dollar and US yields. Kunal adds the dollar index faces a crucial support at 109.20. He says crude slides due to worries over China demand, economic slowdown. And for the dollar INR, Kunal says 81.20 acts as a support, while 81.92 is a firm resistance.
Well, on bonds, we've got Neeraj Gambhir who says, of Axis Bank, who says that the market has started the week on a positive note as US yields stabilized and the rupee appreciated post the US jobs number on Friday. For the rest of the week, he says the market will take cues from the October US CPI release and demand and weekly auction. He expects the 10-year benchmark bond yield to trade in a range of between 7.35 to 7.5% for the week.
Well, we have a lot of stocks because we had that midweek holiday to track for you today, and we'll get to that in just a bit in our top 10 segment. For the timing, let's run you through the list. Paytm, Jubilant Food, Phoenix Mills, and PI Industries, they are stocks on the back of positive news flow. While we have Dr. Lal Pathlabs, Coal India, BPCL, Hindalco, Godrej Consumer, and Bosch, they are stocks that could open up with a bit of a red tick.
All right, Mark Matthews is now joining us of Bank Julius Baer and Company. Mark, great to have you back on the program. Thank you very much for your time. You know, here in India, we are almost nearly there at previous all-time highs, which is a very different situation compared to what we've got going in the US. But the dollar is also coming off sharply. It fell big time last Friday, and it's been down the last 2 sessions as well. What's going on? Are we set up for a bit of a rally in the US as well from here on? I mean, the extension of the rally we are seeing there?
I think you hit the nail on the head. It is the most important thing. The dollar has been profoundly inversely correlated with the world stock markets over the last year, and it looks like it's peaking. We think it is peaking. Both our technical and fundamental analysts think that, but we don't see it really collapsing. Frankly, we shouldn't want that either. We see a more of a neutral sideways trade in the dollar over the next few months, and the major reason for that is there's still a big rate differential between the euro and the dollar. But even if the dollar goes sideways, I think that's tremendously helpful for risk assets because 40% of the S&P's revenues come from overseas. Emerging markets, we know, have always had a headwind when the dollar is strong. And I overheard you talking about the gold price. I also think the gold and silver, great beneficiaries of the dollar peaking out here.
Mark, hi, good morning and thanks for being with us. It's been an exceptional run for the Indian markets, and now the word on the street is that there's big money coming in from foreign investors, which could drive our markets higher. How are you feeling about India now? Do you think this is just the start of a long-term upcycle, or are we reaching a mature phase of the bull run?
Well, I suppose there's 2 kinds of foreign investors into India. There's the emerging market investors, and then there's the global investors. The emerging market investors, I think, will be putting more money into China because they don't want to get left behind if China opens up. And I also overheard you saying that officially China is saying they're not going to open up. But anecdotally, there's just lots of stories about tweaking here and there. And a sensible person would think, well, you can't remain closed forever because your economy will suffer greatly. And I must say that in my own screening, I found about a dozen very large Chinese stocks whose price-earnings ratios are numerically below their dividend yields. And an old Peter Lynch method of investing, Peter Lynch, one of the great value investors, he said, if you ever find a stock whose PE ratio is below its dividend yield, you just close your eyes and buy, no matter how bad the news is, because that's far too cheap. So, PetroChina, 10% yield, 3 times earnings. ICBC, about the same, actually. Therefore, sorry, I don't mean to ramble, but I think that the emerging market investors may gravitate more to China, but the global investors, they, I think, who are not in India presently, could come in if they're looking for alternatives. And it looks like, real old-fashioned economy stocks, industrials, financials, things like that, they've clearly begun to outperform technology, and that would lead you to India.
Hi, Mark. Morning. Going by what you're saying, do you believe that India is at the upper end of the band? If China is going to, start attracting some money, we have been celebrating. Last couple of weeks have been good. The FIs have been showing us big money. Valuation-wise, we are much more expensive. But do you think that the Nifty, the Indian headline index, is at the upper end of the band?
Well, it is, but, usually stocks do go up, right? So there's no problem being at an all-time high. Because usually stocks are kind of close to their all-time high. Earnings grow and stocks go up. And looking forward, to my mind, the economic trajectory is a positive one in India. The INR obviously has been suffering. So if it's no longer suffering because the dollar's peaking, that's also something that will make it more attractive. On balance, I'm still perfectly fine with India. I think over the next 12 months, it might underperform the North Asian countries because they did so badly last year. But if we take a longer-term view, we'd still like to be in India because of the strong demographics and all those things that I'm sure you're well aware of.
Yeah, no, absolutely. We'll have to. There is, of course, lead and lag, right? Some markets do a lot better, price in a lot more, and then have to wait for things to catch up. So that's possible. Mark, so just a quick point on China. You said emerging market and global investors. What's the difference really? And how large? What is the pool size of emerging market investors and global investors? I'm assuming that global investors who are in emerging markets are global emerging market investors, aren't they? Sorry.
They are, but clearly emerging markets are a subset of global markets, and they're a much smaller set. And I don't know the data, I apologize, but developed markets in aggregate are much bigger than emerging. So if you get the global investors who allocate, no matter if it's developed or emerging, deciding they want to put a little more into emerging because they can see the dollar peaking out, they can see the technology sector peaking out, and that's what obviously was responsible for the bull market in the US over the last decade, then I think India will pop up on their screens. And the emerging investors who already know India very well or probably allocated there, they could shift some money out of India to China because they see the upside in China in the event of a COVID loosening. On balance between the two, I think the global pool would be much larger than the pool that's dedicated purely to the emerging markets.
All right, Mark, we'll leave it at that. Thanks a lot for joining in and giving us your quick thoughts on the markets and how things are going to pan out from here. Virtually at all-time highs. So this market is roaring in the firm grip of the bulls, and looks like not much can change that, at least at the moment. Let's slip into a quick break. On the other side of the break, our entire research team will be joining in to help us with a list of top 10 stocks as we kickstart a brand new day of trade. Keep it with CNBC-TV18. Welcome back. Is this the day or is this the week when we hit all-time highs on the Nifty? We're not too far away from that. 18,604 is the level that we're looking at. And the SGX Nifty indicating that we could perhaps even be at 18,400 this morning. But lots of stocks to talk about, so let's get straight to it. Coal India first up on our radar. Nigel, how did the numbers look?
Well, I'm going with a little bit of red actually, Sonia, because the numbers are a little lower than what we were working with. The sales number, well, that was lower. The EBITDA number, well, that was hit because the realizations were low and input costs were high, and the profit number as well missed estimates. The big reason is the blended realization that was expected to come in at around that 1830, 1850 odd mark. Well, that came in at around 1781. So there was a 3-4% miss on that front itself. It even missed Kotak's estimates. The e-auction volumes, which are normally, bulk of the profitability, well, that came down to around 10 to 11 million tons, or in terms of total contribution, it was down to around 7%, which was a little bit disappointing, a little lower than what the street was working with. Cost did spike up. Employee cost was higher. We'll have to find out how much of this was provision provisioning for the wage hike. While stripping ratio, well, that's a non-cash item, but that as well was higher. The sweetener came in, though, in the dividend form, and that will support the stock, actually, because 15 rupees dividend is what they have declared. And if you look at the futures plate, well, it's not really factoring in a big dividend out there. So that as well will be at play. Going with red for starters, and then we'll see a bit of a recovery, my guess is. Well, going across to Sonal. Sonal, BPCL numbers disappointing?
Well, yes, like the other oil marketing companies versus the poll, the reported numbers, of course, are much better because of that one-time grant. But other than that, it is a weak set. Revenues declined by 5%. This is the reported number that I'm talking about. This time around, the company has reported an EBITDA of 1,400 crore rupees, which compares with an expectation of a loss of 7,500 crore rupees. And it is improved on a quarter-on-quarter basis as well. Margins at 1.2%, net loss at 304 crore rupees versus an expectation of 7,500 crore rupees of loss. As I said, these reported numbers, they were aided by a one-time LPG grant of 5,582 crore rupees. The beat, so to say, after adjustments is only driven by the refining segment, like the peers as well. So GRMs came in at $16.8 per barrel versus $6 per barrel, which was estimated. Refinery throughput, however, was lower at 8.8 million metric tons versus an expectation of 10 as the number. Marketing segment continues to see big losses because the companies had not been able to take price hikes further. CLSA on the back of this has cut the target price to 405, calls it a weak quarter. It was a net loss this time around, and rebound in margins should allow improvement in second half. However, Jeffries says that OMCs are still making losses of 12 rupees per litre on fuel, and with the elections coming up across states, this is something that will continue because they will not be able to raise prices. So marketing losses could continue for all the OMCs as well. Back to you.
All right, Sonal, thanks very much for that. Metals are going to be in focus once again. Hindalco particularly, because Novelis has reported numbers, and numbers are a bit subpar, Nigel?
Well, the numbers were in line, but the outlook is muddled. Though you have the dollar index that's cooled off, which will be normally positive for base metal, so Hindalco could see a good recovery on that front. Let's run you through the numbers first. The adjusted EBITDA number in absolute terms as well as on a per ton basis, well, it was in line. The last quarter it came in at around $550 per ton. The problem is the near-term outlook. That's the next couple of quarters could be muddled because input costs are higher, some higher inventory as well. And that's why the management has guided that maybe you could see a pullback on an EBITDA per ton of close to around 75 to around $125 per ton. But they're saying it's only in the near term. They continue to hold on to that guidance of $525 per ton. That's the sustainable number that they're looking at. The other factors is their capex, well, they've scaled it back a little bit. Remember earlier they were working with around $1.3 to $1.6 billion. Now they've scaled it back closer to around $1 billion. The net debt number has spiked up a little bit. You know, even on a quarter-on-quarter basis, it was up a little bit. But the management said that in the second half of the year, you'll see working capital that is ballooned up to close to around $600 million. That'll get unbound, and that's why they're saying that the free cash flows will be around $500 million for the entire year. So the stock starts off in the red, and then we'll see a bit of a recovery. But Mangalam, from the consumer space as well, Godrej consumers numbers were disappointing.
Well, the street was bracing itself for a weak set because the company had guided for so in their second quarter update. But turns out that on the operational front, the weakness is a little more than expected. So at the revenue level, 3,400 crores is what the street was working with. The company's reported similar numbers out there as well. But EBITDA has come in at 542 crores. This compares with 560 odd crores. And as a result of which, the net profit has been lower as well. Volumes have dipped by 5%. The street was working with a dip of around 5 to 6 odd percent. So no problems there. But here's where the margins missed expectations. Gross margins declined by about 200 basis points on higher raw material prices. But secondly, the company's upfronting its ad spends as well. Ad spends as a percentage of sales have come in at 8.4%. This compares with 6% itself. And as far as geographies are concerned, weakness in Indonesia continues. Africa as well, where we saw revenue growth in double digits, there was a sharp knock on the margins because of higher marketing spends. So in light of that, India has been relatively stable. The second half is more crucial, and that's where the company said that they expect gross margins to recover. But part of those gross margins will actually be put back into advertising. So to that extent, the commentary will be crucial to watch.
Okay, let's also track Paytm. Continues to report steep losses both on the EBITDA and net side. More importantly, the pre-IPO investor lock-in opens on the 15th of November, so all eyes will be on that. Abhishek Kothari has more details. Abhishek, over to you.
Well, this time around, they have beaten both the polls in terms of revenue as well as the net loss. So revenue is up 76.2% YOY and about 14% sequentially. It's higher at about 2,014 crore versus our poll of 1,842 crores. Now, net loss has widened YOY, but it's 25 crores below our poll. We were were working with a number of 596 crores, but it has come in at around 572 crores. So contribution profit grew strongly on a YOY and quarter-on-quarter basis. The contribution profit margin has expanded to 44.1% versus 43.2% in the previous quarter. Brokerages are bearish on the stock given the fact that Morgan Stanley has an equal weight rating, CLSA with a sell rating, and Macquarie with an underperformance rating. However, they say that revenue trends are broadly in line, but operationally it's a strong quarter for Paytm. Back to you.
Okay, all right. Talking about that, lock-in period cooling off, Nykaa will be a stock that could be in focus today itself because their lock-in has expired. So keep an eye out on that one. Both the promoter and the non-promoter lock-in as well will be there. So we'll keep an eye out on that one. But Manglam, tell us about Jubilant FoodWorks.
Well, for Jubilant FoodWorks, it is pizza which is still in the making. That's how I would read the numbers, because while revenue and EBITDA were largely in line with street expectations and, gross margins declined by about 200 basis points, understandably because of cheese and vegetable inflation, the net profit was lower on account of higher depreciation and higher effective tax rate. So that is not really a worry. The Domino's like-for-like growth, which the company has replaced the same-store sales growth, has come in at 8.4%, which again is at the higher end of the street's expected band. Now, the problem is that there was no significant growth in their non-Domino's portfolio. The company said that they are looking to open 20 to 30 Popeye stores in this year itself, but they will assess unit economics and market fit of all the other verticals that they have, that's Hong's Kitchen and Ekdam Biryani. As far as Domino's itself is concerned, the positives are, they added about 76 stores versus 50 to 60 expected. They've guided for 250 stores being added, and the digital verticals doing well for the company. So things are good and some things are not so good. So as a result of which, I would say, the stock will see mild green today because of the mood of the street and the fact that it hasn't done well in the last few months.
All right. Pizza is not cooking that well, but let's see how things go from here. But Sonal's with us to tell us about Phoenix Mills and PI Industries and how they look this time. Sonal.
Well, it's a big green for both these stocks because strong set of numbers. Starting with Phoenix Mills, the consumption has crossed pre-COVID levels as well. Overall revenue growth of 75%, EBITDA up 104%, margin expansion of 800 basis points, and profit growth that has come in at 250% on a YY basis. This is versus last year. If we compare it with pre-COVID levels as well, the revenue growth has come in at 57%, EBITDA is up 81%, and profits have also gone higher. The company says that even retail consumption and the rental consumption is back to pre-COVID levels, or even better than that. Talking about PI Industries, revenue growth of 31%, EBITDA 49%, margins have expanded by 200 basis points for the company at 24%, and profits have gone up by 46%, driven by both export and domestic markets for the company, where exports grew 29%. This is on a higher base, where volume growth in export markets came in at 25%, domestic growth also strong at 36%, volume growth came in at 31%, and newly launched brands is something that is contributing to significant growth for the company. So a green tick here as well.
All right. Thanks very much, Sonal, for that. Dr. Lal reported numbers as well, and that's an interesting company as always. We have the management also joining us a little later. Ekta is here to outline the numbers first for us. Ekta, hi.
Thanks for that. Well, the devil was really in the details for Dr. Lal's, because on an operational reported basis, it was actually a good set of numbers. Revenue was up around 7%. The street was expecting around 11% growth, so that missed estimates. But the non-COVID-19 revenue was up 15% year on year. It was up 7% Q on Q. And the company has generated the highest ever Swasthfit revenue ever in a quarterly basis of around 95 crores, which is basically their preventive testing. Margins also improved to 27 versus 23.4% on a Q-on-Q basis, though it's low on a year-on-year basis simply because of the COVID-19 contribution same time last year. And profit came in line with estimates of around 74.5 odd crores. But brokerages continue to be cautious. Credit Suisse, Nomura, Morgan Stanley, Antique, all of them are cautious in terms of the higher amount of competitive intensity that they could face. And remember that revenue has been flat X of Suburban this quarter. So that might be a little bit of a dampener for Dr. Lal's, along with the fact that the valuations are extremely expensive for Dr. Lal's. So that's where the upside would probably be capped today.
Okay, thanks a lot for that. In fact, we will be discussing the second quarter earnings and the outlook going forward with Bharat Uppiliappan, who is the CEO of Dr. Lal PathLabs. That comes up at 8:35 a.m. So do stay tuned in for that. In the meantime, let's also tell you about Bosch's numbers. I'm going with red for Bosch because although the revenue growth was quite strong, because of a recovery in the automotive market. The revenue growth was about 25.4%. It's the margins that continue to be under pressure, and it's a multi-quarter low for Bosch in terms of margins. Margins falling about 50 basis points year on year at 11.7%. The management says that it's higher material costs, higher other expenses, higher personnel costs that has impacted their margins this time. And also the top line growth was largely because the production volumes have recovered because of the inventory filling for the festive season and improvement in semiconductor supplies. So I guess because of the weakness in the operational performance, the stock could be under a bit of pressure today. But in case you missed out on any of these stocks, here's a quick recap. Stocks with positive news flow, there's Paytm, Jubilant Foodworks, Phoenix Mills and PI Industries. While stocks with negative news flow, there's Dr. Lal PathLabs, Coal India, BPCL, Hindalco, Godrej Consumer and Bosch.
Okay, all right. Well, those are all the top stocks we're tracking. But let's hop across to Manisha. She's joining in to tell us about all the action from the commodity space. Hi, Manisha. Morning.
Morning, Nigel. I'll start with the crude oil prices, which have come off its 2-month highs, and this is after China reaffirming commitment to zero-COVID policy. Also, that the Brent futures trading margin has been hiked by nearly 5% overnight, and that has led to some profit-taking by the longs as well. And then you had the EIA saying that the global demand growth forecast for the next year has been downgraded to 1.16 million barrels per day. And then the rise in U.S. crude inventories also weighed on. So there were some factors that led to profit-taking that we saw in case of crude oil prices. But it is the metal prices that have continued to gain up. You have gold trading at 1-month highs, silver at a 4-month high, copper prices at a 2-month high, aluminum is trading at a 2-week highs as well, as the markets still believe that the U.S. rate hike in the next month is not going to be as aggressive, and the dollar index trading at a 1.5-month lows has been supportive too.
All right, Manisha, thank you very much for that. We'll take a quick break here. Deven Choksi of KR Choksi will join in for some fundamental stock chat. Later, we'll also connect with the management of Dr. Lal PathLabs, as just pointed out, on their second quarter earnings. Stay tuned for those conversations.
Well, we're going to play catch-up this morning, and that's why the SGX Nifty is suggesting that we're likely to start off at around 18,350. Keep in mind, the SGX Nifty, it compares with the Nifty futures. So the premium on the Nifty futures is around 60 points odd. So that explains why we're talking about 18,340, 18,350 odd on the Nifty itself. Well, let's get in Deven Choksi, who joins us this morning of KR Choksi. Hi, Deven. Morning. Thanks so much for joining in. Well, let's start off with a couple of earnings reactions, Deven. Coal India, that's been the star of this year. It caught everyone, by surprise. The underinvestment in fossil fuels, that's what's led coal prices higher and the stock price as well. But these numbers were a little bit disappointing, though they have the sweetener with regard to their dividend. How do you read it?
Yeah, Nigel, good morning. Well, I think from the expectation point of view, I think there may be some kind of a let-off that is possible. However, if you look at, I think, the volume growth as well as, I think, the growth driven through the pricing, both of them have basically worked in favor of Coal India, as I see it. Going forward as well, I think, given the kind of higher amount of volume that the company is now producing, is likely to remain sustainable. So from that perspective too, I think the earnings could possibly be driving in the positive direction going forward. Earning growth particularly could be driving in the positive direction in coming period. So I think, and along with that, as you rightly mentioned, I think the dividend remains, I think, a sweetener because the company distributes a good amount of dividend along with. So that way, probably the things could work. However, specific investors only would remain with, I think, likes of Coal India and other PSU companies. So from that perspective, don't expect too much of a large following coming into the public sector undertaking companies. Maybe I think the re-rating on the stock probably has happened from what it was earlier, has already happened, and I guess I think it will continue going forward.
Okay. What about Paytm, Deven? The losses for the company have gone up and the pre-IPO lock-in ends on the 15th of November. So lots happening over there. But the number of customer acquisitions have also gone up for them. So things are not that bad. But tell us, how are you approaching the stock now?
Yes, Sonia, good morning. Well, I guess I think the views haven't changed. Till the time company shows how they will produce profit, even if they end up acquiring customer at the cost of profit, I think I would not be excited at all. Because in a tech-driven business, I think it is very easy that somebody else could possibly, I think, disrupt you if he has a better money power than you. So one thing is very clearly understood in this case also, that even though they have been acquiring customer, even though they have been adding more volume, but they are making business, I think, at a loss. Till the point of time, I think you make money. I think this particular business cannot be bought into the portfolio. That is my clear understanding. And that's where I would think that I think we will wait for more time, I guess, I think if they end up making more money. But otherwise, I think clearly look at some other alternatives.
All right. Devin, the two areas, right, which saw huge momentum for the last couple of days is public sector banks, and that continued. SBI, BOB reacting to results, but I mean that kind of sparked off another rally on Monday. The index was up 4%, and then you have these rail infrastructure stocks, RVNL led, but IRCON, IRFC, etc., which did very well. Any thoughts on both these spaces?
So fortunately, Prashant, I think public sector banks are now having better liability management side to talk about. On one side, I think they are having lower cost of deposits continuing into their books. On the other side, fortunately, the corporate center buying has started happening for money, both from working capital side as well as from the term loan side. And as a result of which, I think these banks have started seeing traction, they have started seeing growth. And not to forget one more aspect, they have been recovering the earlier provided NPAs into their books. And that is where probably I think the balance sheets have started becoming more stronger going in this period. I would think that given the kind of valuation that they have been and they are currently, there is a scope for re-rating into many of them. And that's where probably I think one could bet with some of the larger banks, including the likes of SBI, which came with a definitely I think a good set of numbers, and BOB kind of companies. I think one could possibly buy into some of these companies and probably, I think, see the re-rating happening in the marketplace. The rail stocks are also driven by the larger amount of orders, I think, which are being released by the government and the growth that one is seeing into this particular segment. So it is at this point of time more a momentum than the profit performance. But one would believe that in coming quarters, I think the profit performance would probably equally be there from current stage onwards. So I think, yes, I think you can ride the momentum at this point of time in rail stocks.
Okay, ride the momentum. I do want your thoughts on some of these path labs, these pathological lab companies. Dr. Lal Path Labs is the one on our list. So I invite you, Devin, to just listen into the conversation that we're having. A quick comment from the management. Dr. Lal's posted a good set of earnings. The key highlight this time was the margin recovery to nearly 27%, which is well above what the street was expecting. Remember, competition is the key problem now in this space with the a slew of discounts that have come through. The fact that the company has seen a recovery in the margins is being taken with both hands. The company's non-COVID revenues has also clocked in a strong growth of 15% versus last year. Bharat Uppiliappan, who is the CEO at Dr. Lal Path Labs, joins us now to talk about that. Bharat, thanks a lot for joining in. First, I want to understand what's happening on the margin front. Is there some easing pressure of discounts from online players? And in terms of the margins, what is the band that Dr. Lal's can operate in for the rest of the year?
Good morning, and it is good to be on your show today.
Thank you.
Couple of points, like you rightly mentioned, and one of the anchors before you mentioned that the devil lies in the detail in our set of numbers. We had a good top line growth, the highest ever top line of 534 crores, which came in at a 7.1% growth over the last year. And also what I would call the non-COVID revenues came at 514 crores, which is at a 15% growth. Now, the way to look at these numbers is that from a YOY perspective, last year was a huge delta wave surge in the country, which carried on till Q3 in many parts of the country. And hence, a strict comparison of a YOY base is really not the best way to look at a set of numbers. We have been saying that you must look at these numbers from a sequential basis. And a sequential growth now in this quarter have been broadly in line with what we have seen, let us say, a couple of years prior to the COVID instance setting in this world. In that context, what we have really done is to continue to focus on the fundamentals of the business, which is all about driving test mix. It is about driving the super specialty portfolio, creating a differentiation in the marketplace, while actively managing the cost pressure, which has led to the margin profile, what we have really got.
Right. Bharat, hi, good morning. No, so give us some sense of what are the gross margins which are sustainable to you?
Yeah, we do believe that, our pre-COVID margin levels of 25-26% normalized EBITDA margins are what we are really, keen to achieve in spite of all the pressures which come into the business. So that is something which we are constantly working towards, on a longer term basis. And that is what we feel comfortable with.
Okay, all right, Bharat. So we got that mid-20s is what you're looking at. But Bharat, if you could give us a couple of more details. The suburban part of business, that's scaling up, right? Till what level do you believe that can scale up? Maybe if you want to give us a quarterly run rate. And also the non-COVID revenues, that's shown a good uptake. What kind of a growth are we working with out there? Double digit?
Can you just repeat your previous question? The first
Suburban contribution. Suburban contribution. Yes. It's been scaling up. So what kind of a run rate are you looking at out there? And on the non-COVID business in whole, what kind of a number are you looking at in terms of growth? Will it be double-digit growth?
Yes. So I'll take the second question first because suburban is a component of the overall growth strategy of the company, right? So what we are very keen is to come back to our pre-COVID growth levels of double-digit growth. So there are a lot of levers being pulled in the business on how do we get to that space. So one obviously revolves around, how do we grow our bundle test contribution in a very meaningful manner? How do we create differentiation in the portfolio? How do we create excellence in service delivery? How do we really get our super specialty tests moving forward? So there are multiple such levers in the business which we will try and activate, including geographic expansion into tier 3, tier 4 cities of India to be able to shore up the volume numbers. Suburban is a very strategic acquisition for the West region. In fact, it's a fantastic consumer brand which has a lot of equity in the marketplace, both among consumers and amongst doctors.
Bharat, most of what you're telling us, we are aware of that. We were like a couple of numbers, right? We got your strategy in place. You've given us a bit of a background. Non-COVID business, what kind of a growth can we look at from there and what kind of a scale-up are you looking at on suburban? Go ahead.
Yes, so we will look obviously for a strong double-digit growth number in suburban because West market is been traditionally weak for us with suburban and the Dr. Lal PathLab test menu portfolio combination. We should be looking at a strong double-digit growth in the rest of the country, yes.
Okay, strong double-digit growth in suburban. Very quickly, have discounts gone down? Because there was quite a bit of competition in the last 5-6 months. Heavy discounts were being given. What's the status right now?
Wonderful question. So we have been tracking competitive pricing, and what we understand is that a lot of them were introductory or promotion prices, which are now slowly being withdrawn or moved upwards. We have seen evidence that the package prices or the one-off test prices, which were a deep discount, are slowly being inched up to what we believe will be sustainable pricing for all the players. This industry has a very high gross margin contribution the way we look at it, but also a very heavy, what I would call fixed cost structure. So it is not really possible to keep offering very, very low prices without fundamentally altering the value chain of this business. In the absence of any value chain, all the promotional pricing will obviously move out over a period of time, and which is what you really are witnessing at this point of time.
Bharat, the only thing is that this is a question we keep coming back to. In your assessment, the slightly longer term average realization per patient, right? Because of all of this, because even if the new age startups, etc., they correct their pricing upwards and slash the introductory offers, even then, I mean, where they stand with their pricing will be far lower as compared to where players like Lal PathLabs, etc. are. So what is the impact longer term per patient realization is going to be because of this phenomenon? Briefly.
So it is assumed that because of the apparent pricing, their realization will be lower to us. But if you start to look at what really will make sense from a business perspective, you will start to see that the realizations have to match us over a period of time. There is no other way. The margins we get is led by the volumes we put in through the system and across a menu of tests. It is just not the top 10 tests, but a host of tests, about 3,500 tests, and the combination around that, which is really what the mix is all about. So it is not a 10 test, 20 test game. It is a 3,500 test menu across the length and breadth of the country. And that is what really gives this business a margin profile. It is just not an absolute per test pricing basis which will get us a margin profile.
Okay, Bharat, we've run out of time but not out of questions. Thanks a lot for joining us and have a great day. That's the word coming in from Dr. Lal Patlabs. Devin Choksi is listening in. Devin, the company says that, you know, a margin range of 25-26% is sustainable and discounts are not as high and as exorbitant as perhaps they were a few quarters ago. How are you feeling about this stock?
Sonia, I think given the valuation, I think only one and the way in which I think the kind of a one can appreciate, I think this kind of a valuation is by way of increasing the volume. The current strategy of the company is to basically expand into the smaller towns and probably try and get more amount of trades done on the number of people and the higher amount of coverage ratio. I think that could work well. However, in my viewpoint, I think everything is in price. Currently, I think the headroom as well as I think the upside is concerned. As I see it, I think is limited unless I think they produce a sustainable volume on the adding number of customers on different locations that they are setting it across. So probably I think for the time being, we'll have to wait and watch how exactly the strategy plays out and whether I think it would result into a higher amount of cost pressure also, given the rollout is happening.
Okay, all right, Devin, I request you to stay on with us. For the time being, we'll slip into a short break. Come back, we'll continue our chat with Devin. We'll also be joined by Mitesh Thakkar as well as Sudarshan Sukhani. They'll be joining in to give us their technical calls.
All right, welcome back. You're with us here on Bazaar Morning Call. SGX Nifty is indicating a 40-point higher start. 18,389 is where we are at. I mean, last two sessions, which is Monday and then the Friday before, we've had a pretty similar kind of day. Market starting higher, selling off, and then at exactly 2:30 or so, around about there, there is a big bid which pushes the market. Not quite at the day's high, but close enough. Sudarshan Sukhani is with us, and Mitesh Thakkar are both joining in with their trade setup. Gentlemen, good morning. Good to have both of you here. Sudarshan, to you first. How are things looking to you? I mean, the Bank Nifty perhaps gets back to its September high, which is also the all-time high. The Nifty is about 2% away. How would you approach things?
Good morning. See, Prashant, the trend is up. The markets were consolidating for 4 days. On Friday, as you explained, it went down, but eventually closed up and broke out of that consolidation. The world markets are very conducive for a continued up move. So the Nifty is expected to go and make a thrust towards 18,600, which is its lifetime high. I think that should happen. It should go and test that level. Whether it succeeds, crosses it, is for the future to say. But we should be prepared for a rally of another 250, 300 points from the current open, where the Nifty should open. Therefore, the trade is, if you have a long trade in the market, stay long with it. If you don't have a trade or want to initiate one today, be prepared for a minor dip in the Nifty and go long. Your stop should be about 18,200. That is the cash Nifty, not the futures. With a stop at 18,200, go long and stay long in the Nifty. Now the Bank Nifty is consolidating for the last 8 to 10 days, and it's given the gap up, it's likely to break out of that consolidation. It's already going to make lifetime new highs. It did that, I think, on Friday. I think it'll perform as the Nifty has done. So both are buying opportunities on minor dips today.
Okay, go long and stay long. That's the advice. Perhaps new highs coming this week. You never know. At least the indications are such. Mitesh Thakkar is also with us. Mitesh, good morning. Are you as optimistic? And what's the strategy for today?
Good morning, Sonia. We've been maintaining a very positive stand, saying that this market will possibly head towards 18,350, 370, and then I think, even try to test the all-time highs, which for the Nifty is about 18,600 plus. So I think just maintain long positions. I think today you would want to try and figure out after 15 minutes of gap up opening where to revise your stop loss to. My sense is that I think, staying above 18,340 would be a very positive thing. So we might open closer to about 18,380, 400 levels. And then if you don't get a dip in the first 15-20 minutes, then I think 18,340, 325 zone becomes your trailing stop loss. And 18,600 should be the near-term target on the upside. For the Nifty, the Bank Nifty also should possibly try and get to levels beyond 41,830, which was the previous swing high, and then try to head towards 42,250.
Okay, all right. Hi, Mitesh. Morning. What about individual stocks?
Yeah. Nigel, morning. I have all buy calls today, a couple of them from the tire space. They were buys on Monday as well. I have a buy on Apollo Tire with a stop at 294, targets of 315 here. MRF is a buy with a stop below 94,000 for targets of 97,500. Tata Steel is a buy with a stop at 104.5 for targets of 112. And ICICI Bank is the final buy call. Keep a stop at 905. Look for a first target of 940.
All right, then Sudarshan, how about you? What would be on your buy and sell list this morning? And what do you do with some of these PSU banks that have had a dream run? Do you put more money there?
I think you put more money in PSU banks on minor dips, not necessarily today. But yes, keep them on your list. You know, these minor corrections keep on happening. Then be brave enough to buy them. There's probably more upside in Bank of Baroda, in Can Bank. And if you add State Bank, then there also. My buy list also starts with a tire-related business. Balkrishna Industries is a buy. It's consolidating for almost 2 months and now breaking out. Stop under 1915. Petronet is a buying opportunity. Petronet has made a very decent bullish pattern. Buy with a stop under 208. My intraday short is SBI Card, which is actually making new lows in this market. So that's an intraday short with a stop above 821. And finally, Ramco Cement is a buy, again with a stop under 715. Cement companies, almost all of them are likely to go on a roll.
Okay, thanks for that. We'll come back, in fact, and get talking about more stocks, but a lot of tire stocks on their list. So do keep that on your radar as well. Let's slip into a quick break. On the other side, we'll have the pre-opening rates. We will also talk to Anuj Podar of Bajaj Electricals to discuss their Q2 earnings. Do stay tuned in.